Hello and welcome to Upstack America's Oracle EBS Financials Functional Training. My name is Bob and I'm the lead senior consultant for Upstack America. Today we are going to discuss the acquire to retire process. Today we are going to discuss the acquire to retire process, A2R process. Now, previously we've talked about the procure to pay process, and also we've talked about the order to cash process. Now, the acquire to retire process is pretty much similar. Okay, it's some of the processes businesses follow. Okay, and the acquire to retire process is basically for when companies are dealing with anything to do with assets. Okay, when they are procuring assets for maybe for use in the business. Okay, now some of the processes as part of the acquire process are pretty much similar to the procure to pay process. Okay, you're gonna realize that. Now, basically, what happens is this: when a need arises within the business, okay, within a department or the whole enterprise, then what happens is someone within the department or anyone who is in charge of whatever business unit want to procure the item will create a purchase requisition. Okay, basically they'll do exact same way that they normally do when they are following the procure to pay process. All right. Let's say, for example, there's a need to buy new computers. Okay, so in a department. So what's going to happen is someone within the department will create a purchase requisition for that computer. Okay. Now, the next thing would be to request for quotation, to raise a request for quotation or RFQs. Basically, these are raised within the purchasing module as well as the purchase requisition. All these are raised within the purchasing module, and then you send as an end user or as a person who works in the department, you will send that request for quotation to the suppliers, and then the supplier will send you with the quotes. Will send back the quotes, and then what you need to do is analyze those quotes from different suppliers. For example, in this case, you send out the quote, the request for quotation for your computers, the one that you want to procure. And all the different suppliers that you deal with, that you have a business with, they'll send you all the quotes for whatever they are selling the computers for. Okay, for example, if you're dealing with Walmart, Office Depot, Staples, they'll give you different quotes. And then you analyze those quotes, and then you decide which one to go with. All right? Now, once you've made the decision on which quote you're going to go ahead with, the next thing is to create a purchase order. Okay, a purchase order is basically a legal document that specifies how much, what item you are procuring from your suppliers, how much they cost, and how many you are trying to procure. Okay, so once the purchase orders has been created, then it's sent out to the supplier. Okay, whichever supplier now you chose based on the quotes that you received. And then the supplier will send you with the goods or the assets. All right, and those goods, they are received within the purchasing module. Okay, the receipt transaction is done within the purchasing module, same as creating the purchase orders, same as request for quotation, and same as the creating of requisitions. Okay, now the supplier, when they send you the goods, they will also send the invoice for those goods. They may send the invoice together with the goods, or they may send the invoice separately. Whichever the case, they will still send you an invoice, which you will have to pay. Now, the invoice transaction is entered in the accounts payables module, okay, for whatever item, asset you are trying to procure, in this case, computers. Okay, so when these invoices are entered in the accounts payables module, okay, and when the create accounting program is run within the accounts payables module, those transactions, they are not sent directly into the general ledger. Okay, because these invoices, they are not like regular invoices. The invoices for assets, and in this case for the computer, they are not like regular invoices. Okay, These invoices, if the client has implemented the fixed assets module, they will be sent to the fixed assets module first before they go to the general ledger module. All right. Now, how are those invoices sent to the fixed assets module? You have to run a program called Create Mass Additions program. Okay. So in accounts payables module, you will run a program called Create Mass Additions program, and this program basically what it does is it picks up all the invoices that have been tagged as assets. So when you enter the invoice in accounts payables module, in the distribution line, if you're part of this training, you know what a distribution line is. If you've already covered your accounts payables module training classes. So when you enter your distribution line, you will enter the distribution account when you're entering when you enter the invoice in accounts payables module. So those invoices, when you're entering invoice that are asset in nature, okay, capital in nature, sorry, they'll have an asset. You won't, when at the line distribution, you won't enter expense account. You would have to enter an asset clearing account. Okay, so the system will know that that invoice is an asset invoice or a capital invoice. Okay, and therefore, when you run the Create Mass Additions program, it will know that it will pick up any invoices which have an asset clearing account, okay, at the distribution level, okay, and then it will send those invoices to the fixed assets module. Okay, now what happens in the fixed assets module? You will have to capitalize those invoices. Basically, you have to create assets out of the invoices. All right, so there's a way of doing that. Okay, and then after that, then those transactions, once you run your create accounting program in fixed assets module, you'll send the transaction to the general ledger. Okay, so there's within the fixed assets module, there's maintenance processes that are done for any asset. Okay, once an asset is capitalized, then for example, within the month, you have to run depreciation. If there's any adjustments within the month, also you have to make those adjustments. All right, whether it's maybe the life of the asset has changed, or maybe you want to make adjustment about the cost, or if you want to make adjustment about the salvage value of the asset, all those things. All right, so whatever you have to do, you do within the month as part of the fixed assets maintenance process, and then at the end of the month, you run the create accounting program and then send the transaction to the general ledger. Okay, that's usually how the acquire to retire process works. All right. Now, as part of the maintenance, also there's some activity called retirement, which it basically means you remove an asset from the system. All right. So at some point, let's say, for example, in this case, you bought the computer. Normally, computers are depreciated for 5 years. All right, if you are going by the US GAAP standards. All right. So after 5 years, that asset would have to be retired from the system because you've reached the useful life of the asset. Okay, so if that's the case, then you'll have to retire it from the system. You have to enter a transaction called retirement. All right, so you remove the asset from the system. All right, and that way the whole acquire to retire process will be completed. Now, what are the journal entries for the acquire to retire process? Now, as far as the requisition entry is concerned, there's really no journal entry. Okay, just like the procure to pay process. Again, also with the RFQ, there's no journal entry that is entered. All right. Also with purchase order, when you create a purchase order, there is actually no journal entry, just like the procure to pay process. Now, when it comes to entering an invoice, which is a capital invoice in nature, okay, the journal entry will be a debit to the asset clearing account and then a credit to payables liability. Okay, Remember, in the procure to pay cycle or process, when you enter an invoice, the debit is usually the expense item, or the item expense, all right, and then credit payables liability. But in this case, with the acquire to retire process, because I remember I said when you enter capital invoices at the distribution line level, you would have to enter an asset clearing account instead of an expense account. Okay, so when the journal entries are generated by the system, a debit will be for asset clearing and then a credit will be for payables liability. Okay, now when these invoices are sent to the fixed assets module, we said that once they get to the fixed assets module, then the invoices would have to be capitalized, all right, as part of the maintenance activities for fixed assets module. All right, now the journal entry for invoice capitalization, where you are changing that invoice into an asset, the journal entry is a debit to the asset cost, basically meaning you are recognizing that you have an asset, and then a credit to asset clearing, which basically offsets the earlier asset clearing, a debit of the asset clearing in accounts payables module. Okay. Now, as part of the maintenance, we said that you have to run depreciation every month in fixed assets module. All right. And the journal entry for that is a debit to the depreciation expense and a credit to the accumulated depreciation. You have to note that depreciation expense is a profit and loss. Affects the profit and loss account, all right, and therefore it's closed at the end of the year, all right. So basically a depreciation expense will affect your net profit or the net profit of the company, all right. Now, as far as the retirement is concerned, all right, when you do a retirement, basically when you're removing the asset from the system, the accounting entry that will be generated will be a debit to accumulated depreciation and a credit to asset cost, which basically will offset whatever the cost of the asset that you had earlier when you did your invoice capitalization. Remember, when you're doing the invoice capitalization, you debit asset cost and then you credit asset clearing. So when you're retiring the asset, you debit accumulated depreciation and then credit asset cost. Okay, so that's pretty much how the acquire to retire process works, and I'll see you in my next class. Thank you so much.